That's started, and I'm going to pass the headset over to Tom.
Yeah, hi everybody, Tom Williams here. Lovely to talk to you. Yes, Gavin called up earlier on. There's something wrong with the trains and one thing and another. These days you can't really use your car to go up into London like you used to be able to. You more or less have to go on the train. I remember the last time I went to London, I wanted to go to Harrods. Now we're talking about, 10, 15 years ago. And I wanted to go into Harrods to get something. So I jumped in my car, right? I drove all the way up there, got to Harrods, could not find anywhere to park. I drove around for a whole hour looking. In the end, I said, right, the hell with it. So I turned around and came straight back. And that's the last time I ever went up to London. So it's pretty, people that live there, they say, oh, no, you don't have a car up here. You go everywhere in a taxi, which sounds a good way. Anyway, Gavin says his apologies, but he will be back in business on Monday. Okay. Now, we're looking at a daily chart of the future of the S&P 500 at the moment. It's running live. All these charts are interesting. I find them all very fascinating. As a matter of fact, I was thinking about the old days. I remember in the old days, the British Navy, when they wanted to communicate with other ships, they had, they had Morse code and they did some hand signals, but they also had a flag system, which they used to put flags up and run them up on the mainsail or wherever it was. And that's why you always see the admiral or the captain on the leading ship with a telescope, because he used to read these. And the flags, of course, were telling you a message. And these charts are very, very similar. If you think of it that way, they're sending you a message. It's built-in weakness or strength. And that's really all the professional people are looking for. Is it safe to go long? Is it not safe to go long? And so on and so on. Now, okay, so we've got the daily chart here. Right. Now we can see right at the bottom here, we've got some stopping volume. And lo and behold, there's a shakeout. Or a springboard. There it is. Now, there's no signal on that, but there is on other charts, I've noticed. Right? So they will all tend to move in harmony. Now, lo and behold, pops up on that, and there. That's what we're looking for. There's a test. It's even come up with a signal log. And the computer tells you, look, it's a test. Now, it doesn't just pluck this out of the air. It's a test. A test is, especially with a computer, it's guaranteed that that's what's going on, because the computer can't figure out any lies or anything. It has to portray what the coding tells it to. And we know that a test is a down bar on a narrow spread, closing in the middle or high, and the volume is less than the previous two. Now, tests only occur after a sign of weakness, a sign of strength, sorry. Right? Okay, so there's the strength, obviously. There's the stopping volume. Right? They're just making sure it's okay. They've sent the flags up. You're the admiral standing on the bridge there. You're looking at this ship, and the flag is telling you, right, there's no supply, I'm off. So up it goes. This widespread up like this is almost gapped up, look. That's not done by accident. That's what you call, Gavin used to calls them gotcha bars. In other words, the professional money see that immediately and they gap it up because they want as little following as possible at that moment. They don't want you on the ride. So they gap it up, widespread up, fast as possible, hoping to suck you at a higher rate, higher price. Now we have another signal here. Now this is probably a no demand, is it?
It is.
Yeah, we've got no demand. Now that does not mean no demand, does not mean supply in the market. It means that professional money has eased off for the moment. So what they do, they test. There's another test, look, this slightly different test, but it's basically a down bar, look. It's a narrow spread, closing middle, right, and the volume is low, less than the previous two, it's low volume. And so it keeps repeating itself. Now what's interesting with these the market is that this keeps on going on like this. So you're the admiral reading these flags that they're putting up, and you know immediately what's going to happen. Now there is some supply coming in slowly here, right? So what they do, they have another test look. There's another test look. It's a down bar, narrow spread, closing middle, volume is low. Low volume is less than the previous two. But we do notice, right, that this is now arcing over. This is caused by a gradual supply hitting the market. So every time they have an up bar, right, some professionals are selling into the up move and causing it to go round over, right, until we get here. And this is running live. This was 2 days ago. That's Wednesday, right? And now we definitely have supply suddenly appeared. What's that say, Rita?
Upthrust.
Upthrust. Okay, an upthrust, as you should all know by now, is a ploy to catch stops, encourage people to go long in a weak market. And that's what it's there for. It's a money-making maneuver. So as soon as you see that flag coming up on one of your ships that you're looking at through your telescope from the bridge, right, you immediately know there's trouble on the horizon. That is an upthrust. Now it has a signal on it, fair enough. Okay. And you can see it rounding over. Now, if we see a test of any sort, right, which if it's bullish, it's highly likely to have a test, it's going to go on up higher. Trends run longer than you think they will. That's part of the way of catching you. It's automatic. Now, before we move on to some other chart, any questions about this? Rita's looking at her screen. She's poised, ready to answer anything. There is a question. There is a question, Rita says.
Robert says, can we say that today we have low volume up bar which confirms weakness after the first signs of distribution? First of all, don't forget we're not finished yet for today, so got another 3 hours, just over 3 hours, so we don't know for sure what the volume will be. But Tom, if today finishes on a low volume up bar, would that confirm weakness?
Well, of course, you may be right. You may be wrong. That's how the market works, I'm afraid. I would personally want to check a lower time frame, which we will do in a minute. But no demand is a typical response to signs of weakness in the background, which is quite logical. There's nothing unusual about that, is there? If somebody brought a car round to you, second-hand car, and they want you to buy it, and yet you heard a whisper from somebody that the engine was blown, you would show no demand. You would not be interested in rushing out buying that car. You're dealing with human beings. Forget about all the whys and wheres and ifs and all that. As far as we're concerned, that just misleads everybody. There's weakness immediately in the background. If this goes up on no demand, right, you've got to visualize a whole picture. Don't forget it's Friday. And this is a dodgy day, I always thought, Friday, because there's a lot of professionals like to go home the weekend naked, as we used to call them. In other words, they have no holding whatsoever at all, which is kind of a nice ploy for a lot of traders. They could sleep at night. Okay. But if this finishes up, we'll look at a lower time frame in a minute and just see if we can detect what's going on. But you can see on this daily chart is rounding over. There is definitely upthrust, which is a flag telling you this is a weak market at the moment.
We've had a request for the yeah, we will go on. We've had a request for the 4-hour chart, so we'll do that in a minute. But one here is right now we already have a volume bar that is turning into what looks like potential higher volume than average. Up on below average would then have a better signal of no demand. Do you get that, Tom? Right now we already have a volume bar that is turning into what looks like potential higher volume than average. Up on below average would then have a better signal of no demand.
Well, again, you have to, it's a game of interpretation, knowing you're dealing with traders that think nothing of trading 40, 50,000 contracts. They have to do that because they have to bully their way around the market. That's what alters the supply and demand, be it only on a temporary basis. But if it goes up on very high volume, it means that there's supply around. If it goes up on low volume, it means there's no demand around. This is what confuses a lot of people. Remember that we're not following any mathematical formula. We're following what the professionals are thinking. They can spot all this stuff that we talk about straight away. It's their response that we're looking at. Okay, now somebody said they wanted to see a 4-hour. Let's look at the 4-hour, Rita.
Okay, there's another thing. Can I just speak?
Yes?
Hi, yeah, so Sebastian Manby has just come along. He's typing into the question box. Hello, Sebastian. He says, I think that a very safe time to enter a long trade is after a shakeout in an uptrend on low volume down bars. What does Tom think? And of course he's reminding us that the volume is wrong on e-signal daily bars. They are a day out. They're a day behind, don't forget.
Well, it just shows you the importance of volume is to professional people. They're obviously deliberately holding back the true figures because they don't, why should they? They don't want to help you. They don't want to help me or anybody else. That's why they hold it back. really, I'll be looking forward to the day where we have what we call tick volume. They can't touch that because that's truly representative of what the volume is. But of course, Sebastian's an expert. He knows he's an expert, so he's just telling me something that he knows I know. And what he says is, of course, 100% correct there. Now, somebody asked to see a 4-hour chart. This is it. Right, Rita's kindly put it up for me. Okay, now, first thing we spot is we have a fantastic top reversals, which is a sign of weakness in its own right. You get an up bar, right, immediately followed by a down bar, red, like that. This looks very much like they're gunning up for stops and mislead as many people as possible, look. Then the red down bar attempts to lock everybody in or out as much as possible. But then they say, all right, okay, that wasn't too bad, we'll have another go at that. Now here's another top reversal here. This is a far more obvious one.
Supply coming in.
Right, the first bar tells us that there's supply coming into the market. Okay. The next bar is a rapid down, which is a gotcha bar.
Reversal after effort to rise.
Right, and that's a reversal after effort to rise. Well, there's an effort to go up, right? Be it swamped by supply, which we know we can see by the high volume. The second bar, a red down bar, which closes lower than the previous bar, is definitely a sign of weakness. There's no question about that. And so it falls, the market. That's the 4-hour chart look. Now, at some time or other, right, you will see supplies dropped off. Don't forget, these professional players, a lot of it's scalping. They want movement. They can't make money if things don't jump up and down. So there's a down bar. Right, there's little or no supply at all, look. There is supply on the up bar, and this is going up here, but it seems to be going up on no demand. And what with these reversals behind us, and the high volume on this bar here, there is definitely supply in the market. So I would say this market's weak. Now, any questions about this one?
No, not at the moment anyway.
Not at the moment, Rita says.
Well, there's a question here.
Yeah.
Peter saying my 4-hour bar shows high volume. Why the difference? High volume on what bar, Pete?
Well, the previous bar does have high volume.
The current 4-hour bar. What the? Oh, well, I don't know. It depends. Tom, do you want to say anything on that? Well, we don't.
All I can do is read the data.
And he shows only 10 minutes left.
There was high volume in the previous bar.
And he says his bar shows only 10 minutes left. Try reloading. Says Andrew, well, I'll try and reload ours, but you know. Well, no. I can't explain that one, I'm afraid. Pete's using real-time data per trade guide recommendation. So Bastian says if you move the pane up between the price and volume, you get Yeah, well, I mean, it's quite high already. So, and Abraham is saying it depends on what time zone you are using. Well, ability to make a low on high. Sebastian suggests the data on real-time data is different to e-signal. Anyway, it's all a mystery. We'll work on it and think about it. Right, hang on, I'm just going through the no mystery, says Sebastian. Right, Edmund's saying, the second last blue bar, since there is inability to make a low on high volume and support is off the low, does that mean there is some temporary buying as well? The second last blue bar, since there is inability to make a low on high volume and support is off the low, does that mean there is some temporary buying as well?
I would say that's a pretty good analysis. But markets don't like supply present. But of course they need some buying to mark these things up. But what's good about this system is that everything is relative, right? So although somebody says I've got high volume, somebody says mine's not high and all the rest of it, my experience is that overall you can more or less believe what you see. It's everything is relative, including the price spread, right? The computer is very good at figuring out what the relative price spread is and the relative volume. So that means we're not tied down to formulas. We're not tied down to this has to happen and that has to happen. Relative means relative to the previous volume, the previous price spreads. And you'll find that that covers a lot of sins, a lot. We don't want to be tied down to any formulas. Now, about this data, I know we've got 3 experts listening to this seminar. There's Philip Friston, who's very, he's definitely an expert. There's Sebastian Manby in the Isle of Jersey. He's an expert. And of course, we have Gregory, in Moscow. So I know if we can get any help from them at some time, I'd appreciate it. But what I'd like to see eventually is tick volume, because I had tick volume running once, but because of various things Gavin was up to, one thing or another, we lost it. Okay, but tick volume counts the number of times that live price bar jumps up and down on any particular time frame, and that works. They seem to have got the idea of what tick volume is entirely wrong in most of the rest of the world. There are some weird things about it, but proper tick volume works, and they can't interfere with it. They can't say, oh, well, we delay that lot till tomorrow or whatever, which, believe me, they do if they can get away with it. But we will eventually get to that. And you will see a vast improvement in the signals, automatic signals. Now, the idea of the signals is to impress on your brain what weakness looks like and what strength looks like. And then once you get that burnt into your mind, you'll be able to read any chart, because they all work the same. They have to, because they're all run by human beings. And human beings tend to do the same thing wherever they are, whatever language they speak, or whatever country they're in. Trading is trading. And then your skill at reading these charts will then show up in your trading ability. Okay? Now this is a 4-hour chart, so it's been marked up, look. But as far as I'm concerned, in my chart, it's showing no demand. And the previous bar's definitely got very, very high volume on it. And on that high volume, look, it's closed almost below the middle, look.
There's a question on this chart. Yes, Robert's saying, could supply from the second top reversal disappear now?
Nothing ever disappears, I can assure you. How's the question, Rita?
Could supply from that second top reversal
Yes.
disappear now?
Well, that's done and gone. But that's why the market's fallen off, because of weakness there. But professional money are poised there. They need movement to make money. They need to have the market jumping up and down. They need to be able to catch stops. They need to be able to mislead you as much as possible. It's all part of the game. You're dealing with professional people who your interest or your welfare is right at the bottom of their list. I can assure you that. So you can't say that weakness is up there, the top back there, that top reversals. That will affect the market for some time. Right?
Okay, put the 3-minute up.
Now, people that are fresh to the market don't really believe what you say. Say, well, how can a 3-minute work the same way as a 4-hour? It's just ridiculous. It's impossible. But here we have the evidence, right? Now we look here. This is a 3-minute chart. And we look down here, right at the bottom, and what do we see? Lo and behold, we have a signal.
Potential stopping volume.
And that it says potential stopping volume. Right. Okay, the market's fallen. Sorry, it's running live, so it clicks updates. Right. So the market is vulnerable to have lower prices that will attract professional money in, right, anticipating they can have an up move, make some money out of it. And there's the evidence, right? The evidence is that after you see a decline, right, and the market is marked down into fresh low ground. Fresh low ground means there's nothing to the left, look. Right, the volume is high. Here it closes in the middle on that volume. And that's what the computer's reading. Saying, well, you told me to put a signal up 10, 12, 15 years ago. So here we go. That's what it's saying. And there it is. Right, now what we'd like to do is to see a test, confirmation that in fact this is strong. So up it goes, and what do we see? Lo and behold. Now there's no signal on it, not on this time frame, but that's a test, look. In other words, it's a down bar. Look, narrow spread, this time closing on the high, and look at the volume. There's no volume.
It is level though. You have to explain that.
Well, it's level. That's why it's gone black. Right? The idea of the black bar is to immediately, so you can immediately identify it as a level bar. That's even better test, isn't it, than one that will close in the middle. So there's, now we know it's a test because of this is in the background. That's why we know that's a test. Right? It's so obvious. There's the strength. There's the stopping volume. That increase in volume, closing in the middle here, must mean something. Only buying can do that. So they have a test, and that's why we know it's a test. Because this right here, look, it can't get more straightforward and logical than that. Okay? So they immediately see that. So they mark it up. Look, widespread up. This is a 3-minute chart. And lo and behold, they have some more testing. And the same thing goes again. Sorry, for 3 minutes, so it's quite a lot of charting here. But you'll find that all these bars are down bars, and the volume is low. Especially after you see a red arrow. Professional money would see that immediately. That increase in volume on that up bar. Supply coming in. They would see that immediately. Right? So if you're a trader and you've got 50,000 contracts on the go, you want to know whether that supply is going to stop your up move. So what they do, they test the market. Look, there's a down bar, got two actually, narrow spread, closing in the middle. Volume is less than the previous two. Don't forget, we use relative volume. So relative to the previous volume, this is low volume. So though there's some supply there, there's no further supply here. So up it goes. But they're still a bit cautious. Look, every time. What's interesting with these charts is that the same thing keeps repeating itself time after time. Right? Now, this is a 3-minute chart. Don't forget, I suppose when you look at a 3-minute chart, if you see a sign of weakness or strength, it's only 3 minutes worth. But you'll see that this thing is going up because there's no supply on these red down bars. Right? And you see that all the way up on this 3-minute chart. Now, we don't have any real supply hit this market yet, not on the 3-minute. What will stop this will be an up bar on heavy supply, where supply is overcoming the demand. In the meantime, you'd expect this to keep going up all the time they got this testing going on. But they're on a roller here. Now, any questions about this 3-minute chart?
And Sebastian's saying the market is in an uptrend as well, and low volume down bars are bullish, correct? Ali has asked a little while ago for the NASDAQ 3-minute chart. The NASDAQ, let's put it up, 3-minute. Now, that was about 20 to 6, so... now, what's your question? Is on the Nasdaq 3-minute chart, the fourth bar after sign of weakness 198, is that a test bar? Well, we don't have a sign of... Yeah. Ours hasn't come up with that signal, Tom, but I'm guessing it could be somewhere like... Can I just put the cursor... is it something like this bar you're talking about, Ali? Yeah. But, yeah, there is a test bar after it, a few bars after, yeah.
Nasdaq 3 minutes. Well, we did have a bit of weakness creep in here. Sudden high volume, look. Right. They marked it up to try to catch as many stops as possible. We know it's likely to be an up thrust. Not a true up thrust, sorry. It just means that there's some supply there. Try to remember the rules. A true up thrust occurs, it's fairly obvious, like a telegraph pole on top of a hill, after you've seen a clear sign of weakness. Right, a clear sign of weakness. Professionals are fully aware of that. They've held the market up as long as possible. They're probably on the brink of unable to hold it up anymore, so they have an up thrust. They're quite capable of marking this up. Just as easy as an auctioneer at an auction, marking the price up, and you've got no following. I mean, I remember, this was going back many, many years, a friend of mine had a boat, and he put it into an auction, right? He was standing near the auctioneer, and the auctioneer was telling everybody how wonderful this boat was, and the price was saying, right, 10,000, 10,000, 12, so on like this. And my friend told me, he said, I leant over, tapped him on the back, and said, let it go. And the auctioneer whispered back, don't be silly, I haven't had a bid yet. And that's a true story. So there you are. And they can do the same thing in the market. Right, so we're looking, and it looks like a bit of weakness is coming right now. When you get these automatic signals appear like this, right, those signals were all written 10, 15 years ago, and they have not been altered. They have not been touched in any way at all, simply because I haven't had a programmer capable of doing it. Right, so when one appears, you need to pay attention to it. I tell Gavin, look, ignore the signals at your peril. But keep in mind, the market's being manipulated. Most of the time. I mean, we do have a sign of strength here. Test, look.
Strength coming in.
Yeah, strength. It was a test. And of course that was testing that weakness there, look. Right, so up it goes. And lo and behold, I mean, we do have another red arrow here, look. But look, that's a test there. It's not obvious because it's a blue up bar. But that bottom tail is telling you that they must have marked that down during the day and tested, or a lower time frame. What time frame is this, Rita?
3 minutes. No,
3, yeah. Well, if you could look at 1 minute, they probably marked that down there and tested it. But there's weakness here, look. And why is that weak? Because it's an up bar, look. The spread is somewhat narrowed. It's closed in the middle. And look at that increase in volume, activity. Only activity can do that. So you certainly wouldn't want to go rushing and going long when that's hovering around. You only trade in harmony with the index. In harmony, well, you must wait to, you never trade unless you recognize a clear principle going on. If you're driving a car, right, you come to traffic lights, you know exactly what the rules are. Right? If you break the rules, you're liable to get killed. Same thing in the market here. Don't go by your gut feeling, because it's probably wrong. Most likely it's wrong. Because you can't help it but absorbing all the information from many sources around you, including the guy over the road. Right? And this will interfere with your overall judgment. That's what's good about a computer. Its logic should not be altered in any way, cannot be altered in any way. It's the logic we're after. But human beings very often don't work on logic. But we've seen a sign of weakness here, look, occur on this 3-minute NASDAQ, is it?
Yes.
NASDAQ. Okay, so any questions?
Yeah, I'm just coming back to the 3-minute of the ES because a question came in from TP. How do you correlate where it will stop the buying on the 3-minute chart from the background of what you said about the top reversal on the 4-hour chart and how the selling pressure from the previous top reversal on 9.2 and 9.3, and as you said, will be in place for a while. So how do you correlate where it will stop the buying on the 3-minute chart?
Well, yes. The thing is that that top reversal we saw on the 4-hour chart will represent a resistance level. It's the levels that are important. Right, and if you see even a 3-minute or 5-minute or 10-minute, whatever, go up into that area or near that, below that area, right, then it will affect that market, and you will see that there will be no demand or even a bit more supply hitting the market. But it's what we call a resistance level. And to get through a resistance level on those top reversals, you're probably going to need, well, perhaps we've had it, a shakeout of some sort. But I doubt it. To me, this market looks weak now, at the moment. But don't think there's any mathematical formula. Don't think there's anything easy here. It's an art reading these charts. Basically, always keep in mind you're looking at the activity of professional traders. And if they're not sure themselves or they want to be bullish, they will test the market. If you ever see a clear test, that's going to go up. Now, of course, I'm saying that. That's not 100% correct. I apologize for this because we do have what we call a fail test. You would expect, that's a good word, you would expect higher prices when you see a test. The word expect. Now, if you don't get higher prices, right, then there must be what we call a failed test. There's weakness there. Now, what's interesting is if you look at the cash market, can you get the cash market up, Rita, for me, please, of, say, the S&P? 10 bars, perhaps? That's it. That's it. Yeah, lovely. Thank you very much. Now, I remember looking at this earlier. Now, the market was closed on Monday, right? Labor Day. Now, we do have a sign of strength here last Thursday, look. Right? The market was marked up on the Friday. Fair enough. And I said at the time, look for a test. They'd like to test the market on a Monday or Tuesday. So Monday was closed, but lo and behold, there's Tuesday. And that could be mistaken for a test. Because it's a red down bar, look, closing in the middle. Now what's wrong, there's two things wrong with this, right, which you must burn into your mind. First of all, the volume is too high, look. There's supply present. A successful test will have low volume relative to the previous volumes. In other words, it'd be half that height. The second thing that's wrong, it's got a top tail to it. And that's why we have these, what we call top reversals, and signs of weakness there. They put the flag up, you're reading it. Be cautious here. First of all, there's too much supply, volume. Secondly, you've got top tail. Testing does not have a top tail like that. That top tail is caused because during the day they've marked it up. In this case, we know now it was a top reversal, or certainly a sign of weakness. Right? And then to add to that, that's, okay, we say that's a test. The market was closed Monday or Tuesday. Wednesday, there's absolutely no response at all, look. And even Wednesday's got a top tail to it as well, look. And the volume is still relatively fairly high. There's supply present. And then this is only up to date to Thursday, yesterday. And even yesterday, look, it's got a top tail to it. These top tails are not good. It means that during the day, they had no demand up moves, top reversals, or there was some weakness there, which you need to look at the daily intraday charts to figure out what's going on. Now, so there's an example, look, of a fail test, which you've been expecting, which they do normally every Monday or Tuesday. The market was closed Monday, so it's a Tuesday. We've got a fail test, right? There's probably a little bit of buying here. Don't forget, professional money needs a certain amount of buying and selling because they must have movement. They can't make movement from a very orderly market. It has to be volatile. They have to be able to jump it up and down.
Okay. Steve is asking, if an upthrust is a strong sign of weakness and market normally goes down, is the opposite stopping volume and then a test?
Stopping volume happens after you've seen a decline. In other words, you've seen a bear move down. Now, the idea of stopping volume is that the price has dropped low enough to make the lower price look attractive to professional people. They're not going to throw in 50,000 contracts there unless they reckon they can move it up a little bit, at least to make some profit. But they can only do that if the price is low enough to become attractive to them. And they have to enter the market on the down bar. Now, of course, it's nice to have some nice bad news. Lots more people being killed in various parts of the world and all the rest of it. Right. No solutions around. Is there going to be a full-time war? Anything. They mark it down as far as they can go, right? They absorb anybody who's shaken out, any supply around, right? They may even be covering their short positions, and that results in high volume on a down bar, right? Now, you don't go long on that. You might do if you were a fund manager perhaps, but we don't. We're waiting for a test. The market usually, it's what usually happens when you see stopping volume. It goes up perhaps 1, 2, even 3 bars. You might even see the third bar might have a red arrow on it, right? No demand. On that, it starts to move sideways 1 or 2 bars and starts falling. When it falls back down into the level's important of where you saw that stopping volume. If the volume is then low relative to that stopping volume, which is fairly obvious to see, then that's what you're looking for. Then you're going to get higher prices because it shows you that the supply that was present on that bar has now disappeared, and they're proving it by this down bar back into that area with no selling, and then you're going to get higher prices.
Pete is saying, can we look at BP? I'm afraid we don't have data for BP. Yeah, we don't, do we, Tom? That's...
I don't have the FTSE, unfortunately.
No, we don't have the FTSE, I'm afraid. So that's probably a question for Gavin when you next hear or see him. Question here. We've been looking at 3-minute charts, Tom. I'll put one up anyway. But it's a general question. Would you trade a 3-minute chart?
Oh, yes. Yeah, if you see a test in a 3-minute chart, you know it's going to go up. So you can jump in and go long, but you may only be in it for 10 minutes, 15 minutes, who knows? Because you'll stay long then until you see weakness coming in. It's called scalping, which is what we in the office like to do. Keeps one occupied. Okay. But once you can read these charts, then your skill as a trader will definitely kick in. Once you get the hang of it, you'll never look back. It's very, very exciting, believe me. But trading is hard work, I must admit. You've got to pay attention. You can't go out shopping or leave everything. It's hard work.
Okay. Question from Leslie. Can we look at crude oil and GC? So we've had 2 questions on gold.
That's on continuous contracts.
Yeah. Crude oil. I'll just put up some more bars first. So there you go, Tom.
Well, crude oil, I mean, it's showing a bit of support here because it's trend line. And, of course, you do have some stopping volume here, look. I think we talked about this before. And lo and behold, there's a test, look. It's a down bar, look. What's that say, Reed?
Test.
Test, there are. Now keep in mind these rules were written 10, 15 years ago. They have not been altered in any way at all. Because this is how the markets work. This is how any market works. It's run by human beings. And the best they can do to fool you or mislead you is with all the rumours, interfere with the volume if possible, if they can get away with it. But that's why relative volume, which we use, is good. That's why we attempt to go up here, because there's no supply here. However, we do have a serious down move, look. There is definitely a bit of supply present around here. But it's not quite clear to me at this moment whether I want to be long on that. Admittedly, that looks like a top reversal. And there is supply on that up move, up bar. But it's not quite clear to me at the moment. I'd have to look at different time frames, which I don't have, unfortunately.
Which answers your question, Leslie. Do we have? But Leslie says that it's really moving today. Can you use USO?
What's that?
What's USO again, Leslie? It's the ETF for crude oil. I think. Hang on. Let's put that. See where. Was that right, Leslie? So that says 4th of. Well, that's. Yeah, I'm not sure we haven't. I don't think. I'm not sure. So what time frame are you talking about, Leslie? Would you say? What time frame would you like? 15 or let's try 15. I'm not sure that.
We haven't got 15
No.
in the oil.
No, we haven't. Oh, no, hang on. Done that wrong. Oh, no. So I've done it again.
At least I had to see it up on this.
I'm all I think I'm not reading your keyboard right. Yeah, no, we haven't. Sorry, we haven't got that. Hang on, let's get rid of all this. No, doesn't look like it is. So Sebastian's saying crude oil is at 93.15 down from Thursday. Down 89 counts. Right. So it's going down, Tom. Right. That's it. The other thing, cents, 89 cents. Sorry. Okay. Right. Gold. Someone has asked. Two people have asked for gold, so we'll put that up. Right. This is gold. Let's put up bigger picture, Tom, first. Right. And then we'll come down to here. Seem to have. So it's gold, Tom. It's a hell of a lot of volume down there.
Well, I'd like to redraw those trend lines if possible. If you take these trend lines off, let's draw some fresh trend lines. Right, so we assume it's falling, so first two tops, first low. That's traditional Wyckoff way to draw trend lines. That's it. That's it. What are these horizontal ones? They're trend lines, aren't they?
I think we at some point may have put in.
Yeah, I'm sure we have.
That's a 50% retracement put in at some
Ah, can you take them off? See, all these lines are all very well, but they can cloud the issue, shall we say. That's better.
Oh yeah, it did. Wow.
Right, okay, we can see at the moment, but yeah, yeah, that's it. Okay, now we can see we've got a little bit of support coming in here, and the reason is, of course, it's hit the lower trend line. There was a bit of stopping volume there. There was a test, so it went up a bit. However, it's been hit by some supply there, look. Now you've got to be careful with these widespread down bars, because there is a saying in the market that when you see a widespread down closing near the low on an increase in volume, as it pushes down through a former area of support and as it rushes towards a former trend line, it's a built-in sign of weakness. So we have to be very, very careful here. We certainly wouldn't want to be long at the moment. And even that looks like no demand. So I would say at the moment, gold looks very potentially weak. But this is what the old say in the market says. When you see a widespread down on an increase in volume, non-excessive volume, closing near the low as it pushes down through a former area of support, or rush it towards a former area of support, which is the trend line here. It's a built-in sign of weakness, so we have to be careful. And I think here, look, we've seen an up bar. It certainly looks like almost like an upthrust, isn't it? Look, it's gone up, closing the middle, and you've got this weakness back. I'd say that's weak, or potentially weak. But, of course, being on the right at the bottom of the trend line, you will have a little bit of support coming in, because there are a lot of traders that trade on these trend lines. Now, once again, I apologize for Gavin not being here to continue this session. He's stuck up in London, as we told you, but he will be here Monday. He will be back by then, and he will carry on his live trading room. Peter, that's Rita's husband, is in Turkey in a health camp, watching all the belly dancers, I suppose, losing weight. That's what we assume is happening. And I say thank you very, very much for listening. We will be doing a newsletter Sunday. Last Sunday we were unable to do one for various reasons, but we're definitely going to do one this Sunday. So thank you very much for listening.
Okay, thank you folks. We'll see you again next Friday. Thank you for listening. Have a good week. Bye-bye.